This is a Brooklyn-bound 2 train. The next stop is Wall Street.
Stand clear of the closing doors, please.
Welcome back, everyone. This is Not Your Advisor with NYU Grad on Wednesday, April 9th. We made history today. It was the second largest Nasdaq rally in history. So I'm going to talk a little bit about that, as well as what comes next in this crazy market. To give you a quick summary, it's basically going to be a bounce. And in that bounce, my opinion, this is not professional advice, if you are a long-term investor who's about to retire soon, in the next 3 years, you should talk to your financial advisor about trimming positions into this bounce. And I'll cover that in a second. This is not a new bull. This is a bounce. And I'm going to give you evidence of historical bounces in the past. But let's jump right in. I'm not going to start with breadth because it was a crazy session. It's been a crazy few days since last Thursday. But yours truly, Donald Trump, had posted this morning on Truth Social around 9:37. Basically, it's a great time to buy. Don't be a wuss was the theme of the post. Don't panic. Don't be a crybaby. And then in the afternoon, I want to actually read the actual post. Quote, "Be cool. Everything is going to work out well. The USA will be bigger and better than ever before." End quote. That was 9:33 a.m. Markets didn't give a crap and continued to sell off. And after lunchtime, before the FOMC minutes, which I didn't even see any news about, to be quite honest with you, they could have just not released their minutes and probably no one cared. Because at 1:18 p.m., there was an announcement from the White House that they were going to pause many countries' tariffs for 90 days. So yesterday's rumor, which was claimed as fake news by the White House, happened today. So I want to know if there's going to be any investigations into this. Who leaked it yesterday? Was it really fake news yesterday and it became real news overnight from indoor closed door meetings? Will there be any investigation into this? Of course not. However, during this process, Trump and the administration raised China's tariffs. That's correct. They raised their tariff rates to over 125%. It was an insane day. And if you take a quick look, I want to cover, technically speaking, today is a follow-through day. Meaning, Monday's low should hold for a while. Until it doesn't, but it should hold. And the definition, I've inserted a link in the show notes so you can bookmark the link from IBD and William O'Neill, who came up with this methodology of what is a follow-through day. Simple terms, a follow-through day is a reversal from a sell-off to mark a potential new low to rally off. So if you consider day one as Monday's session where we rallied, checkbox. Day one of an attempted rally begins when the major index closes up or finishes high in the day's range. We got that on Monday. The count continues as long as the previous low is not undercut. Tuesday and today, even with the selling in the morning, did not undercut Monday's low. Check. The third checkbox is on day 4 or later, a major index rises for a big price gain with volume heavier than the day before. This is a follow-through day. We're a day early because day 4 would have been tomorrow. Today's day 3, but I'm going to give it a checkbox because every single thing is green on heavy volume on the news of the tariff pause for 90 days. The next grid here that you'll see is a screenshot from Wikipedia of the largest Nasdaq composite gains for one session. Now, please forgive me because we are number 2 on this list. That percentage gain is wrong. We're actually up 12.16% today. Still, it's the right numerical order. Today was the second largest gain in the Nasdaq one-day gain ever. But I do want to give caution here. Look at the dates. The number 1 session that rose the most was January 3rd, 2001, amidst the dot-com boom bust. That day, it was up 14%. The third place is October of 2008, during the great financial crisis. It was up 11.8%. Fourth place, December 2000, again during the dot-com boom bust, up 10.4%. Number 5, October 2008, GFC, up 9.5%. Number 6, March 2020, remember COVID lockdowns? It was up after that fall, during the fall, up 9.3%. Look at number 7. Look at number 8. Look at number 8 tie. Look at number 10. Look at number 11. Look at number 12. Look at number... You get the drift. All of the big gains like today happen during bear market crashes. Okay? So, I'm giving you this data for free. When you talk to your financial advisor, pull this up, and when you talk to them, ask them how to protect yourself after this bounce. Because the biggest rallies happen during these crashes to suck all of us back in with FOMO to get back in to the most risky areas of the market. And those areas are going to bounce the most to entice everybody before they crush everybody. So be very, very, very careful. So I did want to quickly go over some luck versus being skilled. I'll go over the actual entries with the paying subscribers, but I've been in a bearish position via VIX call options for a while, and I luckily top ticked the exit yesterday, a few minutes before the close. I had 2/3 of my position still on the VIX calls. I sold yesterday right before the close because I felt I squeezed enough of the juice out of the lemon or the fruit. And history has shown how VIX gets crushed once it rallies a lot. So I did that yesterday, and with like 2 minutes to go, I rolled some of that position into bearish positions again into like Bitcoin area. This morning, it didn't really do much. The trade wasn't doing much anything. So I sold that position at par, and I went long a small position on SMCI via call options. So I got lucky twice in the last 24 hours. And again, I'm just sharing this because, number one, when you have a very big profit, you should feel good about selling and booking those gains. I was telling my paying subscribers I have a secret thank you type motion that I have when I sell in profit. just to give gratitude, and I move on to the next. It just helps me reinforce my own psychology. But again, I want to reiterate, this bounce is not a new bull market. I've given you the evidence of such. If you are a nimble and very quick trader that has your wits about you, you can play this bounce as a trade. Areas that are going to bounce the hardest are the ones that were crushed the most during the sell-off in the past few months. Areas like semiconductors, like Nike and those type of consumer names, the nuclear energy sectors, semiconductors for sure. Semiconductors rallied hard today. So, I mean, today you could have closed your eyes and went long at 1 o'clock and you would have made money. A lot of it. But I'm telling you, this is going to bounce maybe for a few weeks. It could be a few days. Who knows? It could be done tomorrow for all I know. But what I'm saying is, whether that bounce lasts a day, a week, 90 days until the tariffs are paused and we have to go through all of this again in 90 days, depending when your time horizon is and when you're going to retire, you're going to have to consult with an advisor or whoever you consult with and think about a strategy. Let's keep going. Let's keep peeling this onion. So taking a look at breadth, let's get into it. All right, so we had 80 new highs on the NYSE, 2,047 new lows. Obviously, that happened before 1 o'clock. 88% of stocks were advancing versus 11% declining, 89% below the 50-day, 82% below the 200-day. Profitable companies that made new highs on the Nasdaq, 0. Despite the second largest gain on the Nasdaq 100, or the Nasdaq Composite, there were 0 profitable new highs. If I change this to in real time, whether they're profitable or not, so these are unprofitable, there were 2 Nasdaq Composites that made new highs. Sector analysis. Every sector was green. Tech up 13.6%, consumer cyclical 10.6%, communication services 9.3%, industrials 8.9%, basic materials 8.8%, financials and energy 7.5%, real estate 5.9%, consumer defensive, healthcare, and utilities were all up about 4.5% together. So everything was up. Not only did we get FOMO buyers, we got short covering, and just panic buying. Everything was up. Let's keep peeling this onion. What was strong and what was weak in the S&P and Nasdaq? I'll try to get through these quickly. I can't cover all of them. In the S&P, you had United Airlines up 20%, Microchip Technology 19%, Delta 19.4%, AMD 18.4%, Tesla 17.4%, On Semiconductor 16.8%, Palantir 16%, Monolithic Power 15.9%, Discovery 15.7%, APA Corp 15.4%, Skyworks Solutions 15%, Expedia 15%, Albemarle 15%, Nvidia 14.7%, Micron 14.6%. You get the picture. I can keep going. We're still in the 14% here. In the Nasdaq 100, I'll try to dedupe strategy up 21.8%, ARM Holdings 20%, AMD 18.8%, Tesla 17.5%, Palantir 16.2%, Marvell 16.1%, Trade Desk 16.0%, Micron 15.2%, Nvidia 14.9%, Global Foundries 14.7%, Lam Research 14.7%, CrowdStrike 14.2%, Analog Devices 14.1%, Broadcom 14%, MongoDB 14%, Intel 14%, Constellation Energy 13%, KLAC Corp 13%, AppLovin 12.4%, Applied Materials 12.5%, Airbnb 11.9%. I haven't even gotten to the 10% yet. What was weak? Short list, Dollar General down 2.6 in the S&P. Market taxes holdings 2.5 down percentage-wise. CBOE global markets down 2%. In the Nasdaq 100, PDD holdings down 2%. And that was it. Let's transition real quickly over to the macro. I'm also going to cover the anatomy of a trade on my VIX calls, and we'll wrap up with some of the miscellaneous macro charts.
We can't forget that this is just a small taste of the in-depth analysis that Not Your Advisor provides. They don't just throw numbers at you. They connect the dots, find those hidden trends, and help you understand what's driving the markets.
If you want the full picture, you got to check out the full Not Your Advisor episode.
Don't forget to subscribe to notyouradvisor.com.
And all their premium content. I mean, it's like having a direct line to what's really going on in the market.
It is. It really is. They cut through all the BS and give you the kind of info that you just won't find anywhere else.
Think about this. Investing is all about making decisions that work for you and your goals. You're the one in control.
Not Your Advisor can give you the map, but you choose where you want to go.
And with that empowering thought, we'll sign off. Happy investing.
Stand clear of the closing doors, please.